actually want to look at some multiple choice questions in national income accounting, that is in macroeconomics. So the first question says, which of the following is not correct? A, the consumer price index gives economists a way of turning dollar figures into meaningful measures of purchasing power. B, the consumer price index is used to measure the quantity of goods and services that the economy is producing. C, the consumer price index is used by economists to measure the inflation rate. And D, the consumer price index is used to monitor changes in the cost of living over time. The right answer is the consumer price index is used to measure the quantity of goods and services that the economy is producing. Actually, we can use the CPI to actually turn dollar figures into meaningful measures of purchasing power. We use the CPI to measure inflation level, and we can also use the CPI to monitor the changes in cost of living, but it's GDP that is used to measure the quantity of goods and services that the economy is producing over time. So the right answer is B. To the next question. So James owns 2 houses. He lawfully rents one house to Johnson family for $10,000 per year. He lives in the other house. If he were to rent the house in which he lives, it has been estimated that he could earn $12,000 per year in rent. How much do the housing services provided by these 2 houses contribute to GDP? A, $0, B, $10,000, C, $12,000, and D, $22,000. So the right answer is D, because James is living in a house that is estimated to be $12,000. Therefore, if we add it to the one that he rents, which is $10,000, we are going to arrive at the answer $22,000. So the right answer in this scenario is that the housing sector contributes $22,000 to gross domestic product. Question 3. In the circular flow diagram, which of the following items flows from firms to households through the markets for the factors of production? A, wages, rent, and profit. B, land, labor, and capital. C, dollars spent on goods and services. And D, goods and services. The right answer is A, wages, rent, and profit. So this is the income that households receive for supplying factors of production, or firms pay for demanding factors of production from households. So it actually passes through the factor market in order for us to obtain factors of production. So the firms obtain factors of production and they pay rent, they pay profit, they pay wages in order to obtain these factors of production. Question 4. If net export is a negative number for a particular year, then A, the value of firms' inventories declined over the course of the year. B, consumption exceeded the sum of investment and government purchases during the year. C, the value of goods sold to foreigners exceeded the value of foreign goods purchased during the year. D, the value of foreign goods purchased domestically exceeded the value of goods sold to foreigners during the year. The right answer is D. The net export is actually the difference between export and import. So when import exceeds export, what happens is that our net export to actually be negative. So the right answer should be the value of foreign goods purchased, that is the import, exceeds the value of goods sold to foreigners, that is the export. And that is why we are expecting that our net export should be negative. The last one, a good is produced by a firm in 2012, added to the firm's inventory in 2012, and sold to a household in 2013. As a result, on net, A, 2012 GDP increase and 2013 GDP decrease. B, 2012 GDP increase and 2013 GDP did not change. C, 2012 GDP did not change and 2013 GDP increase. D, 2012 GDP declined and 2013 GDP increased. The right answer is B. 2012 GDP increased and 2013 GDP did not change. Now, you need to understand that inventories of firms are considered as investment. So in 2012, the good that is produced and added to inventory is actually counted for investment in 2012. So in 2013, this investment does not come into place. And that is why we do not count it as part of GDP in 2013, but actually count it as GDP, part of GDP in 2012. And the reason why the GDP for 2012 will increase because that good is an inventory form of investment, which is an increased investment, and it will increase the 2012 GDP whilst making the 2013 GDP unchanged. So these are actually the right answers for this particular session.